From Nollywood and Afrobeat, fintech is another industry that has put Nigeria on the global stage with minimum government intervention. In the last 5 years, over $1.5 billion worth of investment has been attracted into the Nigerian fintech industry, with over 4 unicorns emerging into global relevance. The sustainability of the industry hinges on its constant interaction with regulators and strengthening of governance principles. This was the thrust of the September 2023 social meet, which had as special guest Mr. Babatunde Irukera, Executive Vice Chairman and CEO of the Federal Competition and Consumer Protection Commission. The President of Fintech Association of Nigeria, Mr. Ade Bajomo, in his opening remarks, highlighted the importance of the event.
Why would we invite a regulator on a Friday evening, for God's sake, in Lagos, by the waterside? I think if there's one thing it shows the seriousness and the maturity of our fintech ecosystem to know that even as we're having a good time, as we carry on, we just want to remember the social meet is something that is there for you to connect, and actually have a good time and meet with people and exchange ideas. So don't miss that part of it. Thank you.
Mr. Irukera, in his speech, called for broader collaboration between regulators to improve service delivery to consumers, curb fraud, and improve the value proposition of the fintech industry.
Globally, regulators are struggling with even finding people on the internet. People are selling things on the internet. We don't know where to find them. And, even in Nigeria, people are saying smoked turkey, and you make an order and you pay, and that business just completely disappears off the internet. Same thing for hair, for clothes, for everything. And one of the ways where those businesses are able to exploit people are the solutions you create. The payment systems, the digital marketing. So you create those solutions to enhance, to enable business, but bad players will always look for those same solutions to exploit people. And so you must welcome, if not even embrace, regulation. And like the president said, the best regulation is the one that has your fingerprints on it.
The event featured a Q&A session.
The second question is from my friend from ProShare. It says, what is the learning point that we've taken away from regulating, from investigations and interventions in money lending? This is a very interesting question. And it's one of those situations where, it's difficult to contemplate someone else's difficulties until you've walked in their shoes. There is a very broad campaign out there to literally just ban money lenders, the digital money lenders. Just ban them. But I've discovered that most of the people who want them banned are those who have either owed or had trouble with them. But one thing we've discovered is that they plug a gap that traditional lending simply cannot plug. And in reality, what defines commerce is the speed. It's the speed of commerce. And good thing you have a MasterCard and all. It's the speed. How did those people develop their businesses? How did they develop laws? One of the greatest exemptions to criminal conduct is that you were acting in commerce. So it becomes a regulatory infraction instead of an intentional criminal conduct because it was in commerce. The speed of commerce is one of the most important things for economic growth indications.
Mr. Babatunde Irukera and Dr. Babatunde Obrima, the Chief Operating Officer of the Fintech Association of Nigeria, speak further on the takeaways and the opportunities to deepen collaboration between the regulators and fintech operators.
Well, I think it's learning for both sides. At least it strengthens the communication channel, because at the end of the day, both for country and for consumers, for business and for government, the collaboration between an association like this and the regulators is vital. And I think it was an opportunity to inform members of the association the direction of the regulator and how the regulator also looks out for them, especially on a global platform, and also to invite them to consider some of the other key issues in how the regulatory system can work. It was also an opportunity for us to also learn from them and understand the space, understand all the players, and actually even know what the resources that are available to the regulator and regulatory developments are. So I think it was very good.
Engagement is critical. That's the only way we can bridge the gap. And so today is one of those events that has happened where we've bridged the gap, being able to bring the EVC to interact with the operators. So, and from his own speech, he says that those interactions, these engagements are necessary so that we are not at friction with one another. So I think today has been good. It's nice to have him, and the interaction has been good. I think the relationship can only get better, and we can understand where the regulators are coming from and where operators are coming from, and we can bridge that gap. As a matter of fact, we started that way back in 2020. We actually got the digital lenders together, law firms, the credit bureau companies, and we developed a document which we call standardization for digital lending, which will be like a constitution for digital lenders to work with. And based on that, we can do some ranking or rating, and we're able to let the public know that, look, these digital lenders are compliant, they are part of this team who are work to be, to do the right things. So we've started that. We are hoping that the regulators will support whatever. I think that we'll go, he has suggested it, we'll take it up once again and maybe run it as a SRO, such that they create a committee. That committee is the SRO for their own sector. So the document is already there, and it's global. I mean, we made sure that it was an international document. So we'll go back to it.
The strides of the fintech industry in disrupting the financial services industry in Nigeria are celebrated. The expectation is that the fintech industry will, in partnership with regulators, explore ways to provide affordable, accessible, and available products to deepen financial inclusion.